All right, Aben Coin Chess and Wine here. I've received several reader requests to conduct analysis on the individual sectors in the market here, so I'm going to try and blow through as many charts of the sectors as I can. The first chart is the QQ ETF of the technology sector. You know I look at the NASDAQ on a daily basis, and we can see right here a sharp sell-off right here in May within the technology sector, and then the Qs settled into this choppy and frustrating trading range denoted by these two blue lines right here. And then what happened was in September, the technology sector broke out with authority right here, and ever since then has kind of settled into this tight consolidation range, despite all of the high flyers that sold off last week in the technology sector. The bears could not even take the technology sector below this rising 20-day moving average. It was a pretty precise bounce off of it. And this pattern that we've got here that I'm highlighting is an ascending triangle with kind of a flat top right here, but with also higher lows that compress the price action. And historically, this is a very bullish pattern that resolves up and out. I think the bears are on the run here. The bear thesis has been soundly defeated time and time again over the past month, even with all of the sell-offs we saw in, again, some of those high flyers last week individually. So I'd expect at least a test of the April highs here. The next chart I'd like to show you is the XLB, the materials ETF. Let's take a look at the weekly chart here to give you an idea of how strong this past week was. You can see dating back to the commodity bubble we had in 2008 at the highs of it. You can see this downsloping blue line here. We can see this big green candle. We broke above that downsloping resistance trend line this week here, and a lot of that is due to the strength in the precious metals as well as the agriculture sector, in the agriculture commodities, I should say. But nonetheless, this is a breakout here. We've had a bullish consolidation period here, and now we're resolving to the upside. So again, I would expect a test of the April highs denoted here by this white line that I'm highlighting, at least. The XLE, the energy ETF. Again, similar kind of pattern here. Sharp sell-off in May, followed by a very congested and choppy trading range throughout the summer. And then in September, we rallied up off the bottom of the range, and then we made a higher low here. We consolidated, made a higher low, and we broke out with authority. Again, if you're going to just cavalierly dismiss all of the breakouts on these charts that I'm showing you, then I guess we just view the market philosophically in a different way. But I respect the price action. I think the price action is really all that pays. So therefore, I'm going to put my faith in the price action, in the technicals. And you can see here a clear break above resistance. I'd probably like to see some consolidation right here in this 57 area. And then I think the energy sector has plenty of room to go up here to get to the April highs. But nonetheless, as long as it holds this prior resistance as support, we've got ourselves a nice breakout and a change, I think, towards an uptrend. The next chart I'd like to show you is the SOX, the Philadelphia Semiconductor Index, right here of the semis. And the semis have frustrated a great many people here. You can see they held in well throughout the early part of the summer, and then some bad news came out here in August, and they kind of capitulated down here, carved out a bottom, as I'm highlighting it right here in late August, early September. And now the semis are consolidating just above, just below prior resistance. And if the semis can break out here along with technology, again, there's plenty of room to run here. The XRT is the retail ETF, and it's performed very well here. We've got a W double bottom here with the right side of the bottom higher than the left side. We've got plenty of shorts piled into this sector, and they are getting squeezed very hard, and I think they could easily get squeezed right here. We're up against May resistance, but that, again, a short squeeze, you guys have seen it, how aggressive it can be. It could easily take us back up to the April highs here. The IYR, same kind of story with the real estate ETF, performing very, very well right up against 52-week highs. Again, insane amount of shorts here, so I'd expect a violent short squeeze up and out of this apex right here of a triangle that's forming. And finally, the oil ETF, actually oil commodity itself, in a broad trading range right here for over a year.